Now, Nigeria is counting down to the continent's largest oil refinery reaching full capacity. The Dangote Oil Refinery is currently operating at 85% capacity and is processing diesel, naphtha, jet fuel and petrol, and aims to rival European refineries in the future. Muyiwa Oni, head of equity research for West Africa at Standard Bank, joins us with his analysis of the West African nation's prospects on this front. Muyiwa, thank you so much for your time this afternoon. And I guess let's just start there. Is the group still on track to reach full capacity in the next few weeks?
Well, thank you for having me. And so I suppose we've seen a lot of progress in terms of production capacity with Dangote Refinery. So I'll say for one that I think, pleasantly surprised that they were able to start producing at the point at which they did late last year, because I was one of the skeptics that still felt it would take a while before we see the refinery producing. So I suppose in terms of meeting full capacity over the next couple of weeks, I would say it doesn't really matter as much, particularly if the refinery is already at its 5% capacity. So if it still lags, then I don't see it as too much of a downside or downer per se, just more because of how much of a progress one has seen from the refinery over the past number of months, and I would say the past couple of years as well in terms of getting the refinery to this stage.
Now there was issues rather around securing crude locally. Talk to me about those challenges.
So in the past, the domestic refineries, so we had about 4 refineries with over 200,000 liters per day capacity, and they did have access to crude at in local currency as well.
Yes.
And so for a while, I suppose the Dangote Refinery also wanted to have that have those terms as well, and so it did take a while before we got to a point where the refinery got access to the local crude. However, and so currently, in terms of the volumes that the refinery is able to access in Naira terms, it's about 89,000 liters per day. So in terms of percentage, one is looking at about 12 to 15% of its refining capacity in local currency. There's still a big part of it that is still, so even though sourced locally, but the institution has to pay dollars for that. So currently, I think about 42% of its producing capacity is sourced, the crude is sourced in the country. So I think currently about 233,000 barrels per day is sourced locally. And it seems over the next month or so, one could get to a point where about 68 to 70% of the crude is sourced locally as well. Even though the big part of it, in terms of currency, it's going to be paid in dollars, and just a negligible amount in local currency.
And I was thinking around those, those forex moves, considering the levels where the Naira is and how, they're balancing that.
So I suppose that's a point as well, and I suppose that's where, in terms of local pricing of the crude, particularly if a reasonable amount of it is sold locally, and since it's also sold in dollars as well, there's clearly that view of how the refinery is able to, I think, ensure that local currency, or ensure that they're able to manage those foreign currency risk and disturbances as well. I suppose if one looks beyond the refinery, quite a number of local manufacturers that had to battle with FX-related losses, particularly because you're sourcing your raw materials, foreign currency, selling in local currency. And I suppose that's an area the business has to battle with. I think what's positive right now is the FX market is far more open, and so there's far more dollar liquidity available. So in terms of accessing dollars to buy the imported crude, for example, there's far more USD available now. I suppose it's more ensuring that prices are or the business is able to ensure margins in spite of any volatility in the currency.
And let's talk about the positives a bit more. I mean, this is really a significant move. Talk to me about the impact it has on the oil market and just the Nigerian economy as a whole.
So I suppose in terms of estimates of the impact, this was done a while ago anyways, but expectations was that one could see about a 40 basis points improvement in GDP, in gross domestic product, from the refinery. And it's a combination of jobs, so new jobs added, and both directly and indirectly. So indirectly as well, more suppliers and service providers in that sector. And then if one thinks about the byproduct of the refinery as well, it does open up that petrochemicals industry and petrochemical capacity as well. So in the past, where a number of these byproducts would have been imported, we now have them available locally as well. And so it's clearly positive as input products for some other manufacturing businesses. So it's clearly a positive. On the FX front as well, estimate is that one could see about a $2 billion positive on a trade balance point of view, and that does help to ease the FX pressure as well. So if you think about the additional costs that have come from logistics and so on, which is off right now, that clearly is a benefit. So the economy as a whole is benefit. I think even from a transparency and just trying to understand what's happening in the oil and gas, in the petrol refining sector as well, the operations of the Dangote Refinery, I think it's helping to increase visibility in that sector. And I suppose the ability for the federal government to take off petrol subsidies as well. I think the refinery operating and producing did help to, add impetus to that.
So I guess, also just producing a petrol and diesel at home makes prices cheaper. You spoke about, the opportunities, or rather the new markets that this refinery also exposes Dangote to. I wanted to touch on the deal that it sealed with Saudi Aramco and perhaps the significance of it all. Really a big move to have an African refinery company, just exporting jet fuel to Saudi Arabia.
So it's clearly a big opportunity. I suppose to your point, beyond Saudi Arabia, one should anticipate and see more of those types of transactions as well. And I suppose beyond those Dangote Refinery, I think others coming up as well clearly do have prospects from that point of view, being able to partner across continents within the region as well. And I think it's positive, even from, so if one goes back to the economy and the ability for the economy to generate effects, the economy moving moving to processing, just beyond just a commodity economy to a processing economy as well. That's clearly positive, because if you wind back 2 years ago, we clearly were net importers of jet fuel. Now we're exporting jet fuel out of the country and even out of the continent. So it's clearly a big positive and a plus.
Muyiwa, thank you so much for your time and just taking us through the progress and everything that's taking place in Nigeria.
Thank you for having me. It's been a pleasure.
That was Muyiwa Oni, Head of Equity Research at Standard Bank.